Hello again, my name is Casey Fleming. I'm the author of the Loan Guide, How to Get the Best Possible Mortgage, and a working mortgage advisor. It costs money to get a mortgage. Sure, this doesn't surprise you, but an eye-opening fact is that you will spend more money on your home than anything else you buy in your lifetime. Still not surprising, but a little sobering? How about this? You will probably spend more money for your mortgage than you will for your home. Even more sobering, you will probably spend more of your working hours in your lifetime to pay for your home and mortgage than anything else you purchase in your life combined. So what are these fees and how can you control them? It is easiest to think of the fees as being in two categories. One category contains the costs of originating the loan, and the other contains the cost of having the loan. Put another way, one is the cost of paying everyone who works on your loan for their services, and the other is the cost of renting the investor's money. The category that you have the most control over is the cost of having the loan, which we now commonly call the price you pay for the interest rate you choose. That's the most complex to understand, so we'll set that aside for a moment and examine the services involved in putting your loan together. The services involved in originating your loan fall into several different categories. Origination fees are the cost of originating your loan. Then there are services that you can't shop for. These are services for which the lender must choose the provider in order to maintain impartiality. Then there are services that you can shop for. These are services the lender requires but for which you are allowed to shop, or services the lender doesn't require but which you may want to hire anyway. And then finally there's taxes and other governmental fees. The government will get its pound of flesh. So now let's talk about who all gets involved and what they do, and explain how that ties into the fees that you're going to see on your closing costs. The first person that you'll have contact with is a mortgage advisor or loan officer or a mortgage planner. Now, what's the difference between these three? There really isn't any difference. What this person does is this person will meet with you, gather your documentation, analyze your situation, and help you determine which lender and which loan program best meet your needs. He will then assemble all of your documentation in a basic file and hand it to the processor. The processor takes your loan file and fleshes it out, confirms all of your documentation, and compares it to the underwriting guidelines of the lender and the loan program that you have selected along with your mortgage advisor. Then she submits it to the underwriter. You usually will see a processing fee on most loans. The underwriter works directly for the lender involved. The underwriter will take the loan file, review and verify all of your documents, and then determine whether or not your loan profile meets the underwriting guidelines of the specific loan program that you have asked for. You will always see an underwriting fee or something similar to it on your loan costs. Some lenders will charge an administration fee. This is just a blanket charge for underwriting, for processing, and for some other fees as well. But there is an administration fee sometimes from some lenders. Some lenders will charge you an application fee, and some want this fee up front. The point is, though, there's no service associated with actually taking the application. The loan officer does this, and especially if this is up front, never pay an application fee. It doesn't exist. Some lenders will want to charge you a commitment fee. Notice that there's no specific function associated with this. Again, don't ever pay a commitment fee. There are certain fees where the lender requires the services and they must select the providers in order to maintain impartiality. The first of these is the appraisal fee. The appraiser will inspect the property, evaluate the market around your home, and determine the fair market value of your home for the purposes of underwriting the loan. The appraisal fee is typically the only fee that you will be charged in advance, besides possibly the credit report fee. Now, the credit agency contacts the credit bureaus to gather your credit history. It then produces a report which it delivers to the lender. A tax service agency performs a service for which you may not see a line item fee, but it definitely is in your costs. The tax service agency monitors whether or not your property taxes are paid. If you have an impound and escrow account and the lender pays your taxes, this benefits you because if the lender forgets to pay your taxes, you're notified immediately as soon as they're delinquent. If you don't have an escrow or an impound account, it benefits the lender, because if you don't pay your property taxes, they're notified immediately. Flood certification looks at flood maps and compares them to maps of your property to determine whether or not your property falls in a flood zone, and if it does, whether or not flood insurance will be required. Now, there are certain services that the lender requires, and you can choose the provider. The first of these is an escrow fee. The escrow officer collects all of the instructions from the lender, as well as all of the documentations, and executes the transaction in accordance with your wishes and the lender's wishes. The escrow officer is a neutral third party and must always remain impartial. The title officer researches the title history of your property. If you're buying a property, they are making sure that the seller has the right to sell the property and also making sure that you are buying exactly what you think you're buying. If you're refinancing the property, then the title officer is researching to make sure that you actually have the right to finance the property. If you're purchasing a property, you will have a pest control inspection. The pest control inspector will look at your property to determine if there are termites or dry rot or any other mechanical issues that would require repair before you finish the purchase. Pest control inspections are generally not required on a refinance. A property inspector, if you're purchasing a home, inspects the property to look at the mechanical components of your home, such as the roof and the furnace, to be sure that they are in good condition, and produce a report to make sure that you know all about your home. Then the government will get its pound of flesh. The county recorder will record all of the relevant documents in the transaction, in particular the deeds, and make them available for public review. They will charge a fee for this service. Generally, in purchase transactions, and occasionally in refinance transactions, depending on where you are in the country, the county assessor will assess a tax on the transaction itself. And these fees can add up to quite a bit, and sometimes the city will also charge a tax. So as you can see, there's a lot of people involved in producing your loan. And obviously you know intuitively that all of these people do get paid. The point is that these fees, other than lender fees, are not generally negotiable in the real world. In theory, some of them are, but in practice, most of them are not. What you do have a choice about is how to pay for these fees. In most cases, you can either pay for them in cash or finance them, either through a larger loan amount or through a higher interest rate. The important point is that you will pay for these costs one way or another. To find out how exercising your options for paying for these costs works, please click on the link below.